Hello, everyone. Thanks for coming. As he said, my name is Nick Hodge. I'm a frequent speaker at the Cambridge series of conferences and some other conferences in the resource space. I never really talk about one thing. I talk about uranium sometimes. I talk about gold. I talk about different kinds of companies. But today I'm going to switch it up a little bit. So today we're going to talk about how to invest in gold. And at the last Cambridge show in San Francisco, I talked about why you should buy gold. The title of that talk was called Keep Calm and Buy Gold Stocks. And this was back in October when we were beginning to see a wide swath of volatility in the broader markets, and gold was just starting to tick up a bit. And I talked about the macro scene for gold. I talked about the Fed and rates and the need to replenish reserves. And I talked about the fact that no one had been investing in gold and
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
Assets under management in gold had been down since 2012 and why we were due for a gold bull market. So I'm not going to talk about that today. That was why. Now I'm going to talk about how to invest in gold. And so it's going to be very high level. If you're wearing a suit, this might not be for you. You might know all of this stuff, but nonetheless, I think it's very important for the retail crowd and especially for the longevity of the video that this presentation is going to get for new investors coming into the gold sector. This is where we are since I gave that talk in October, since I stood on the podium in San Francisco and I said it was time to buy gold stocks. After I said that, the S&P dipped by 10, 12, 15%, has come back a bit, and gold has gone up more than 10%, although it's now retraced a bit. And a bit more credence for you, these are the companies I mentioned on stage in San Francisco. Midas Gold, MAX, Revival Gold, RVG, Palomina, PA, and Almaden, AMM. All of those stocks have gone up 20 to 60% since I mentioned you should buy them in October. So that's just a little bit of why you might want to pay attention to things I say. What has happened since October? Well, gold has gone up a bit, as much as 8%. It's tested resistance at 13. It got swatted back from there a bit. It really needs to break 13 to go higher, but we're there now. We've seen gold miner mega deals. We saw Barrick and Randgold. We've seen Newmont and Gold Corp. We've seen some other ones. We've seen gold sector accountability. So we've seen the creation of the Shareholders Gold Council with John Paulson, and we saw him win his management fight with Detour Gold and replace the management and the board there. And we've just seen, I think, more accountability from management and gold companies.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
As it relates to preserving and growing shareholder capital and value. And in a broader market sense, we've seen great volatility. We've seen Apple cut sales for the first time in more than a decade. We're seeing yellow vest protests in France and spreading elsewhere. We've seen central bank buying from China and Russia, and we've seen a bit of dovish Fed talk. So continued sort of the bullish talking points, if you will, for gold. I put this slide up in October. This was from Max Kaiser on Twitter. He was a very staunch gold bull a couple of years ago, has since gone to crypto. And in August, he tweeted this: "Does anyone remember gold?" with the flashy memory eraser from Men in Black. And I said that, yeah, people are going to start remembering gold very soon. And then I got this message on Instagram from a guy I went to high school with, and that's why I decided to make this presentation. And this is a guy I haven't talked to since 1999, 2000, and he hits me up in my inbox, and I guess he's been reading the articles I write, and he says, "When you say buy gold, do you mean like gold bars, or is there some good stocks or something?" And ding, 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 this is like contrarian bull market stuff, right? So what do I mean when I say buy gold? That's what we're going to talk about today. Let's get physical. You can buy physical gold. You can buy bullion. You should buy coins. You should try to buy them as close to the spot price as you can without paying a large commission to a broker or a dealer. You should buy mainstream coins like American Eagles, or as they mentioned on stage this morning, Canadian Maple Leaves, which are 4 nines fine. You should buy them from reputable dealers. either people at this show or people you trust or people that charge low commissions, or Google Van Simmons, David Hall, Rare Coins. He's one of the most respected, well-trusted coin dealers in the United States, if not the world, and he'll take your call and he'll put together a coin portfolio for you. This is what I tell people. I can't tell you where to store your gold. It depends on how much you have and what you're storing it for and what you need it for and what your goals are. There's a lot of good places to store your gold. I keep mine in a safe in the basement. Don't try to get it though. Buried in your backyard. Hire a vault. Hire a third party. Let your dealer store it with his third party. Those are all good options. There's no boilerplate here. There's no, everything is bespoke. Everything is custom to you. So these are your options. I'm just letting you know what they are. You can buy physical gold over an exchange. A lot of you know this with the Spider Gold Shares, GLD. That represents 1/10 of the gold price physically backed by gold, the largest physically backed gold exchange traded fund in the world. That's GLD. They've come out with a mini, the GLDM, which is 1/100th the price of gold, so a bit cheaper price for you to get in. Sprott also has a physical gold trust called the Sprott Physical Gold Trust that trades under the ticker PHYS. That's sort of the same as GLD and GLDM, albeit much smaller, and the main difference there is with the Sprott fund, your shares are redeemable for actual metal. You can trade them in every 30 days for actual silver or gold. So you can get physical metal for your paper shares. And so that's what he asked. He said, what, you should buy gold bars or something? So that's that, gold bars out of the question. And then he said, well, are there any gold stocks? Or there are a couple of gold stocks. And so we're going to start at the very top, and we're just going to go right down the funnel. You can buy all the biggest gold mining stocks in the world with an ETF called GDX. It holds about 50 companies. It has $10 billion under management, and it's going to own all the big names in the gold space, including the recently merged Newmont Gold Corp, including the new Barrick, and including Anglo Gold, Kinross, Newcrest, et cetera. Those are going to be the largest gold mining companies in the world here in the coming years. That's a Bloomberg chart of their last year's production. VanEck also has a junior ETF, and it used to be a decent proxy for the junior sector, but it's really not a junior ETF anymore. There was some rejiggling of the funds in recent years, and it's really more of a mid-tier fund than a junior fund. It's got $4.2 billion under management, and there is a ton of overlap with its big brother, the GDX. It holds more companies, 70 some I think, as opposed to 47 or 50, but there's a lot of overlap. They both own Kinross, they both own Anglo Gold, for example, and you're getting much more silver now in the GDXJs, so not a bad option. I'm just telling you what's involved in that fund if you choose to go the GDXJ route. And there I just put the top 10 holdings for you. We can do royalty and streaming companies, and I've been recommending some of these recently in my front-end newsletter called Wall Street's Underground Profits. These are companies that allow you to diversify across projects, across management teams, across jurisdictions, and in that respect allows you to reduce the risk a little bit because you're not putting capital into one project that may or may not succeed. You're getting a portion of the proceeds, a royalty from projects, mines that are in operation that have been vetted by big companies like Franco-Nevada, Wheaton Precious Metals, Sandstorm, and others. So a low-risk option, and some of these pay dividends, so you can get a bit of cash as well as potential capital appreciation. Mid and junior producers, there may be some of these in the room. Here we're looking for low cost, right? Low quartile cash costs, safe jurisdictions, the ability to grow. And by that I mean either grow operations, expand their ounce per year production, or grow organically via exploration. So they have an asset, but it has additional upside that they can grow their tonnage, they can grow their ore body. And now I'll start mentioning actual names that I follow, because before I was just talking about funds and things, but these are companies that I either invest in or have recommended in my newsletters. One is Atlantic Gold. They have the Moose River Consolidated Project in Nova Scotia. When it was built 2 years ago, I believe, it was Canada's newest open pit heap leach mine. Growing production very fast. Just made an investment in another junior mining company called Velocity Metals. Very good management team in Stephen Dean and Maurice Ballinger. Just come from a major lineage, and so they do well to keep costs down, and they built the mine on budget, and just quality all around. They have a booth out there. Sean Thompson is at the booth if you want to go talk to Atlantic Gold. Teranga is doing well in West Africa. They have one mine that's operating. They're building another mine, and they're exploring at another property. So they have 3 properties, one in production, one on its way to production, and one that is delivering very good results. That's Teranga. I don't see that company mentioned a lot, but they do have a booth here as well. And another one that has done well just here in the past 2 months, it's really taken off, is K92. They had problems a year or 2 ago where in Papua New Guinea where they had some people come on their property and damage some equipment, but everything has been rectified. They're back to exploring their deposit called Cora. It's an underground operation, ramping up very quickly, and catalyst ahead in the form of resource growth. So 3 names I watch in the mid and junior producer space there. And we'll talk a bit about developers, and this is the famous chart you've seen 100 times about where in the cycle you want to invest, either before a major discovery is made or right at the beginning of when a discovery is made, once you get 1 or 2 confirmation drill holes, and everybody gets very excited about the speculative potential or capability of that particular stock. And then when it gets a bit boring, right, when they either start to go into the study section or they're permitting or whatever it may be, cools off a bit, nobody pays attention, and then they get ready to go back into production and it becomes a mine. And so that's sort of the typical life cycle of a development company, of a mining company, and you want to keep this chart in mind when you're entering your positions. We have some developer companies here, many of which have booths out there. If you were on my walking tour this morning, we stopped by a couple of these companies. I'm not going to go real in depth because you can go talk to them, but I'll spend, 30 seconds on each. Midas Gold on the TSX, MAX, is developing the Stibnite project in Idaho, some 6.5 million ounces going through permitting right now. Will likely grow much larger. We'll remediate the site. We'll open up a salmon passageway that's been closed for decades. We'll leave the site better than they found it. Has community support and is well run by Stephen Quinn. High quality development story there. They have a critical element called antimony. That's a nice kicker, provides nice cash flow once the mine's going to get built. Almaden Minerals has a booth here, run by Morgan Poliquin. They're developing the Ixtaca project in Mexico. Just came out with a feasibility study in the past month or so. Project does good at much lower gold prices, even at $1,150. It's a good gold mine. Has a 40% IRR at $1,250 gold, I think it is. And you're split evenly there. That's 4.5 million ounces divided almost right down the middle, silver and gold. So you get silver and gold. Revival Gold in Idaho also developing the past producing Bear Track asset, which was owned by Meridian and then Yamana. And they have the complementary Arnett Creek package, very proximate to Bear Track. There's infrastructure there. There's a pit. There's buildings left in place. They have 2 million ounces on the books. They're targeting a resource update this year to get to 3 million ounces. And I think they only have a market cap of something like $40 million, and they have 2 million ounces of gold in a past producing mine. So high quality story there, run by Hugh Agro, also has major lineage from Kinross. And then Integra, I guess we're on an Idaho theme here. Integra also in Idaho with George Shalamis, who sold Integra recently here in the past few years. This is the next iteration of Integra. So 3 development stories there. And what I like about those is that they're in, except for the case of Almaden, which was a pure discovery, they're brownfields. And I view brownfields as a bit less risky. A brownfield is a project that was in past production. And so it's already been developed once. So here in these companies, I want to say they're obviously riskier. They're not in production yet. They may not get into production. You're at the subject of the gold price. And so you really want to be looking at the nuances of these individual stories, vet the management teams, see what the next catalysts are. Their drill results due out. Is there a resource update due out? Is, whatever it's going to be. Are we working on a feasibility study? Are we trying to bring in a new project? Are we trying to use different techniques? Like, are we going to try to employ ore sorting? Are we doing something cool with metallurgy that might unlock a higher recovery? All those things are questions you need to be asking when you're diving into these development companies. And now we'll go to exploration, and I want you to look at that chart just again, because now we're going you're left on this chart, and we're getting earlier on. Now we're trying to find a stock that is going to find something. So we're getting much more risky. Most of these companies fail. The majority do not succeed. And by extrapolation, most of your investments will fail if you don't do deep diligence. In exploration, people matter because you can't see under the earth, right? And so you want to invest in management teams that have done it before, that have found things before, that have worked in the area or in the trend or the belt that they're currently working on, that know the area, that know the rocks, that know the people. And not just the people in the geologic sense and the business sense, but the community sense as well, right? I mean, you can't just go into people's community and start drilling, and you gotta tell them what they're doing, why you're there, and how they can become stakeholders in your project if you find something, mineralization that is economic. And so all those things you need to be checking on when we're talking about exploration. I guess it was late when I got to my hotel room last night. I didn't put the tickers for all these companies, excuse me, but here they are. Here's Palomina, Andrew Thompson. He's got a booth over here. He's on to some visible gold in Peru. He's staked a very large area that has been ground truthed by artisanal miners. There's dozens, if not hundreds, of local miners there now just pulling gold out of the river in Peru, the Puno district. Andrew is trying to find the source. He thinks he may have found it. We're getting permits now. They'll be drilling there by August. He showed me the rocks. Go to his booth. He's got rocks from the project, visible gold in the rocks. Ethos, I don't think they have a booth here. Ethos is ECC on the TSXV. This is a legacy company. They've got a gold project in Mexico called La Purisma that is a vein system, but they think there's disseminated gold in between the veins that could make it open pittable, and so they're going to drill in between the veins in the next 5 or 6 months. And they also have a very large tabular vanadium project in British Columbia that they're going to drill as well. So simultaneous drilling on both gold and vanadium this year. Chicana Copper, also in Peru. The ticker, in fact, is Peru, PERU. They're chasing breccia pipes, high-grade copper gold in Peru. I think waiting on a permit to be able to drill some more, but the original holes they put in some of these pipes, they have a series of breccia pipes, were very high-grade. They're going to test the rest of the pipes. Mawson Resources in Finland, they've already made their discovery. They know there's gold there. Now they're finding cobalt as well, so gold, cobalt in Finland. They continue to drill. Sun Metals and Velocity Minerals. I mentioned Velocity earlier because Atlantic Gold just took a stake in them, and I mentioned Sun Metals to you because Teck just took a big chunk out of Sun Metals in the past couple of weeks, and their project looks interesting. Getting to the end, I'm going to go fast. Generators and banks, so you can have prospect generators. These are companies that hold a portfolio of projects and try to get partners to joint venture them or option them, so they're spending their partners' money to advance the projects as opposed to their own shareholders' money. Companies here in Millrock, Greg Beischer, he'll be on a panel with me tomorrow morning. They've got projects in Alaska and Mexico, some JV'd out with Centerra Gold that's about to be drilled. Nevada Sunrise has projects, obviously in Nevada. They're also drilling a copper project right now that they just hit smoke on and are going back to follow up. Riverside Resources, run by John Mark Stouty, sitting right there in the front row, has done very well to manage his company during the downturn, has kept share structure tight, has not really diluted, and had the good fortune to raise money at higher prices when we were in a bit better market. They continue to advance their projects in Mexico. And then Almadex Minerals is the little sister of Almaden and and Zukar. And then there's land banks, and there's really only one company that comes to mind. This is Amir Adnani's standing in the back, Gold Mining Inc. And what he's been able to do is put together a mineral bank or a gold bank of properties, several different properties that when they were each trading on their own had a combined market cap of some $800 million. And Amir's company is currently being valued at less than a quarter of that, over 22, 23 million ounces across all categories in their land bank. So go check out his booth. I'll leave it there. This is stuff I said in the beginning about the why gold market, not the how, the debt, the institutional money that hasn't been there that's now coming back. Sean Boyd from Agnico Eagle saying there's just too few high-quality opportunities left and far too many players. So some of these high-quality opportunities and development plays are going to go bye-bye. And that's evidenced by what you've seen in the past couple of months. Barrick, Randgold, Newmont Gold Corp, Northern Star, the Pogo Mine, et cetera, et cetera. It's starting to happen. Thank you very much. Go to outsiderclub.com, Resource Stock Digest, sign up, free resources. Thanks for coming. Appreciate it.